Hi astronauts, welcome back to BitWise. You may have heard that Bitcoin is limited, which makes it scarce. Have you also wondered what happens when all the Bitcoin are fully mined? What happens to the miners who validate transactions and secure the blockchain network? Let's discuss this more. Stay tuned and support us by subscribing, liking, and sharing. Thank you. First, we start at the basics. How many Bitcoins are there? Gold and Bitcoin are also considered scarce assets because of having a limited supply. While gold has an unidentified number of tons as a limit, there are only 21 million Bitcoins that can be mined and used. Now, you might ask, why is Bitcoin capped at 21 million? The creator Satoshi Nakamoto intended the unit prices of Bitcoin to eventually align with traditional fiat currencies. Setting a limit also gives Bitcoin anti-inflationary properties. Bitcoin's maximum supply is 21 million. This supply limit is also a factor for this digital asset's highly fluctuating price. If you're wondering about how many Bitcoins have been mined, the current circulating supply is around 18.8 million. This only means that only over 2.2 million are left before it reaches its limit. Not taking into account around 18% or 3.3 million Bitcoin lost forever, we have a more detailed episode on this. Check the top right card. Now, the question is, what happens when there is no more Bitcoin left to mine? This might be a thrilling event for all the Bitcoin enthusiasts out there. Once miners have generated all coins, there will be no more BTC available for mining. Having additional supply will only be possible if Bitcoin's protocol is altered and allows a more abundant supply. But after many years of being in the crypto market's limelight, there weren't any confirmed plans to increase Bitcoin's maximum cap. With that, it's safe to assume that its supply limit will remain at 21 million BTC. Bitcoin's supply is nearing its limit, so what possible effects can users face? Here are some notable implications of reaching Bitcoin's supply cap. The process of mining Bitcoin allows miners to gain rewards for every successful block verified in the network. Miners get two types of rewards from mining, a portion of BTC for every confirmed block and incentives that come from transaction fees, which are paid to the miners in exchange for their efforts in processing and verifying each transaction. Higher fees allow miners to gain higher incentives. This is also their basis for prioritizing a transaction in the network. The higher the transaction fee you pay, the faster it is for your transaction to be included in a block. When all Bitcoin has been mined, the miners will no longer receive block rewards since there are no more coins to be generated. They will only earn from the transaction fees to be collected from every confirmed transaction. Miners can continue securing the network since they will still earn from the said fees. However, it is not sure if these fees will be enough for miners to provide sufficient resources for them. Another notable thing that greatly affects the rewards received by the miners is an event called Bitcoin halving, which happens after a set of 210,000 blocks are mined or roughly after every 4 years. In the early years of Bitcoin, miners received 50 Bitcoin for every block they verified. After the first set of 210,000 blocks was mined in 2012, miners were rewarded with 25 Bitcoin. This continued until the recent Bitcoin halving in 2020, leaving miners with a 6.25 Bitcoin reward per block. Bitcoin's price increase also implies an increase in miners' transaction fees. Currently, the average fee for every Bitcoin transaction is $5 or RM20. Note that this fee was only at $1 last year, meaning this price can continue to spike in some events like a crypto boom. While this might be considered a piece of good news for Bitcoin miners, there is no assurance that the cost of the mining process will remain high in the years to come. No one can tell the future of Bitcoin's technology and how it will work in the near future. If the mining process further develops and improves to the point where it is easy and cheap, this process can also be turned into another business. On the other hand, Bitcoin mining is a process that many jurisdictions consider to have an adverse effect on the environment due to its high energy consumption level. If Bitcoin mining's energy efficiency improves in the future, miners can consider securing the network and staying in business. How much Bitcoin is left? As we've previously mentioned, only about 2.2 million Bitcoin is waiting to be mined. When all these have been generated, Bitcoin's supply will be scarce, which could eventually lead to an increase in price. For investors, this may be great news since Bitcoin is a highly volatile asset, with extreme price gains and dramatic falls. This could be an excellent opportunity for aspiring investors to enter the market and try out investing. Guessing when Bitcoin reaches its maximum limit can be tricky. But some crypto geeks say that if Bitcoin's mining power remains the same as when the first block was mined, the last Bitcoin can be mined by October 8, 2140. Others also say if Bitcoin is still used as a currency and continues to serve functions similar to fiat money, there's a possibility that it will be highly stabilized. Being the most popular and leading virtual asset over thousands of others, Bitcoin will be remembered as the asset that cannot be dethroned, not only in terms of market capitalization and price but also for its excellent contribution to improving the state of today's financial system. About the future of the mining space, efficiency is a very important focus that new players in the space must take into consideration. Because mining profit depends on how efficient a mining operation is, the executive noted that efficiency brings the cost of energy down to a minimum. The focus is not always about profit. The future of the mining sector relies on what he described as the real Bitcoin miners, who value solving blocks more than how much Bitcoin they can convert into fiat currency. It's the continued commitment of industry players to support the infrastructure of this monetary and financial breakthrough at any cost necessary. When the time comes, a Bitcoin mining business can still be profitable because transaction fees will replace block rewards as a source of revenue for miners. By then, the industry predicted that Bitcoin would be worth over $430,500 each. Transaction fees will generate almost $3 billion in a year at this price point. He noted that there are also other growth drivers to consider, including Layer 2 improvements and energy efficiency enhancements. Bitcoin mining experts shared how they prepare for the next Bitcoin halving. Several possible moves exist, including planning for survival during the bear market and capitalizing on the bull market. We hope this episode will provide some insight when the time comes. No matter whether you are a crypto fan, miner, industry player, investor, developer, etc., for sure an exciting time ahead that helps you plan for the arrival. At BitWise, sharing our research with you is our biggest motivation. We welcome all kinds and forms of support within your means. Comment and let us know your thoughts. Please also caution that there are lots of scammers in the comment section. We will never ask you to send us any crypto. Thank you for watching this video. If you are also interested in investing in cryptocurrencies and owning a piece of the future of money, I have good news for you. All you need to do is download the Luno app. Luno is the first cryptocurrency exchange to get licensed and regulated in Malaysia by the Securities Commission, so you're safe to use it. Once you have downloaded it, go to the rewards section and type this unique reward code, NUB8XT. Once you do that, you can deposit and buy cryptocurrency. Purchase a minimum of 250 ringgit of any cryptocurrency, and you will receive a 25 ringgit reward of Bitcoin. Just make sure to key in the code before any deposit and purchase. I will leave a link also in the below description. Once again, a quick disclaimer that nothing in this video shall constitute financial advice. You are responsible for your own financial choices.